What is pre-settlement funding underwriting? Hi, I'm Rhonda. Welcome to the Express Legal Funding channel. So, you've applied for pre-settlement funding, and the status of your application says sent to underwriting. What does that actually mean? When you apply for pre-settlement funding, there's a crucial step that happens behind the scenes before you're ever approved: underwriting. In simple terms, underwriting is how a legal funding company decides whether your personal injury case qualifies for funding and how much money they can responsibly advance you. In this video, I'll explain what underwriting in pre-settlement funding means and how the process works. What is underwriting for pre-settlement funding? Underwriting in pre-settlement funding is the process of evaluating your legal claim to estimate two main things: how likely you are to win or reach a settlement, and whether the expected settlement amount is high enough to safely support a cash advance. Unlike a traditional loan, pre-settlement funding is non-recourse. That means you only repay the funding if your case wins or settles. If you lose your case, you don't owe the funding company anything. Because of that, underwriters aren't looking at your credit score, bank balance, or income. They're focused almost entirely on the strength and value of your legal claim. So, why is underwriting such a significant factor for legal funding? Since pre-settlement funding is repaid from your future settlement, the company takes on real risk. If there's no recovery, they lose the money they advanced. Underwriting is there to answer two key questions. Question 1. Is this case likely to result in a settlement or verdict for the plaintiff? Question 2. Is that potential recovery large enough to cover attorney's fees, case costs, the funding payoff, and still leave money for the client? Good underwriting helps prevent situations where a plaintiff's settlement is eaten up by fees and funding payoffs. It's meant to keep the funding responsible, realistic, and fair for everyone involved. What information do underwriters look at? During pre-settlement funding underwriting, the funding company typically works directly with your attorney. You usually don't have to gather a stack of documents yourself. Here are some of the main things underwriters look at. Liability. Who was at fault? Is it clear that the other party caused the accident or injury, or is liability disputed? The stronger the proof of fault, the stronger your case looks in underwriting. Injuries and medical treatment. What injuries did you suffer? What treatment have you received so far, and what do doctors say you'll need in the future? Medical records, bills, and doctor reports help underwriters estimate how serious your injuries are. Insurance coverage and policy limits. How much insurance coverage is available from the at-fault party and possibly from your own policies? Even a strong case can only settle up to the available policy limits in many situations. Damages and losses. Underwriters look at your economic losses, such as medical expenses, lost wages, and future care, and may also consider non-economic damages like pain and suffering. These details help them estimate the potential settlement value. Case stage and timeline. Has a lawsuit already been filed, or is the case still in pre-suit negotiations? Are there upcoming mediations, depositions, or a trial date? The more developed the case is, the easier it is to estimate its likely outcome and value, and the impact of accrued interest will be less the shorter your case is to resolve. All of this information helps underwriters decide whether to approve funding and how much to advance without overextending against the potential settlement. Once underwriting is complete, the funding company uses its evaluation to decide if your case qualifies for non-recourse pre-settlement funding and calculate a reasonable funding amount that's only a fraction of your expected net settlement. The goal is to give you enough money to help with bills and essential living expenses now, while still leaving you with a meaningful share of your settlement later on. Remember, underwriting isn't about judging you as a person. It's about judging the case itself and making sure the advance matches the realistic value and risk of your claim. So when you hear the term pre-settlement funding underwriting, think of it as the careful review that protects both you and the funding company. By evaluating the strength, value, and risks of your case, underwriting helps ensure that the money you receive now is based on a thoughtful, responsible estimate of what your case may be worth in the future. If you found this helpful, be sure to like this video, subscribe to the Express Legal Funding channel, and check out our other videos where we break down legal funding in plain English. Ready to apply for pre-settlement funding? Visit expresslegalfunding.com.